Thank you for joining this webinar, and I think this is a very, very interesting one to have here today. And it's a conversation that we're going to that I think is going to make a massive, massive difference to the ecosystem in Nigeria and in Kenya. And we're seeing this as a launch pad to other conversations around taxation and fiscal policy across the continent. So the conversation is going to start here, or it's not going to end here. We're going to be posting clips of this across all our platforms. So yeah, thank you so much, Mr. Oladejo, Adeyemi, and Simon for joining us here today. It's a pleasure. And yeah, and I'm sure my attendees here have lots of questions to ask. And yeah, let's just start with I'm going to start with Simon to kind of uh, give us like some background context of the fiscal changes that are going on right now in the Kenyan market.
Thank you, Emmanuel, for that. As you all know, Kenya has now become one of the major tech hub in Africa, and quite a lot is happening technologically. I'm sure you saw recently Kenya is top 10 amongst the countries that are using AI in the whole world. And many companies have already started coming to Kenya. Actually, most of the testings are being done here in Kenya. And it is quite interesting to see that now also the government is also trying to come up with some tax policies revolving around the digital space. So this today marks 30th day of September. And being that month after the passing of the Finance Act of 2025, we've already started seeing some regulations coming into place to regulate, the AI companies, to regulate those who are trading in the transport industry, like Uber, and to regulate some other digital market players like Netflix, etc. So quite a lot is happening, and I'm trusting that we'll be able to dive deep into that in our today's conversation, and it's gonna be quite interesting.
Awesome. Thank you very much for that background context, and I'm looking forward to the interesting changes that will be happening in the digital space, and of course with the era of artificial intelligence and everything. Mr. Oladejo, should I call you Oladejo or Adeyemi? Which one do you
Either
prefer?
is actually.
Okay. Yeah, so yeah, can you give us some background context on Nigeria as it were, and the fiscal changes that are going on? I think it's been a lot in the news right now as well.
Yeah, you're quite correct, Emmanuel, and thank you for putting this together. Thank you for the good job that you and your team are doing in finance in Africa. With Nigeria, the case has always been we made attempts in the past as a country to have some cosmetic changes to the tax laws through the Finance Act. I guess that's the approach that Kenya is also taking. So that began from the past administration in 2019, 2020. I think the very first one became a law on the 13th of January 2020. But the challenge in that particular approach was that it was only amending specific provision in the existing legislation at the time, and as we currently have it. So this administration came up with the idea of having to revamp the entire law. So having to completely do away with the existing laws that we had, and then decided to set up a brand new law, altogether. And that they've done through 4 different reforms, or 4 different acts, I should say, act of the parliament, that are really expunged or repealed all of the taxing legislations that we've had in Nigeria up until this very moment. So that is going to be taking effect from the 1st of January 2026. But those laws have actually been passed into becoming act of the parliament since the 26th of June 2025. So that provides a background to what the journey has been like for Nigeria.
Yeah, I think that's quite interesting, and there's a lot of unification going on with this. So, can you confirm from the record, because I've seen some. I looked through the initial draft bill, but would you still have bodies like the IFRS and the states tax regulators and all of that, or is it now one body joined together? And what does that mean for businesses in practice?
Okay, fantastic question. We still have the states inland inland revenue services, I should call them, or um, um, state tax authorities. What has changed is just that the nomenclature of the FRS has now changed. Based on the new act, it has now been changed to Nigeria Revenue, Service (NRS). But of course, you would expect that clients and businesses will not get used to that name, very quickly, just as we had the case with EKDC, IBDC, and NEPA. Up until today, most Nigerians are still referring to those distribution companies, as NEPA. So we would expect that will take some time before people and businesses get acquainted with the new name. But in terms of the structure, as to having the subnationals having their own tax authority, that's exactly what you still have is preserved as it has always been. And then you have the federal government collection and administration being manned by the FRS, now fondly referred to as the Nigeria Revenue Service.
Oh, cool. Yeah, that's interesting. Now, I'll take my response back to Simon. So the tax reforms. So I think the Finance Acts in Kenya has been since 2019. I've been following it closely with interesting fiscal reforms and all of that. But with the latest update, what does it mean in practice for business operations, for companies operating in Kenya?
Yeah, thank you so much for that question. Before we can actually talk of what it means to businesses, I would want to bring it into context that tax reforms in Kenya have been quite massive, and to some extent, it has beat the logic of something we call certainty of taxation. Because what we have seen within a very short period of time, even consultants are struggling to get to understand some of these laws, because 1 year we say we have digital asset tax, that's the tax on the cryptocurrency, at 3%. Next year there's a proposal to do it at 1.5. Then the current year, there's a proposal, and actually not a proposal, an act of parliament says that now we no longer are actually applying the digital service tax. So these things, digital asset tax. So these changes have really affected businesses negatively, so to say, for now, because what we have is that investors don't have the certainty of what is going to happen next. And I'll give another example. Initially, we have had this proposal that businesses that are going to operate outside of Nairobi, which is the capital city, and also outside of Mombasa, which is part of one of the cities here in Kenya. So businesses that are operating outside those two regions used to enjoy 150% investment deduction. And we saw quite a number of investors coming in, investing in these other regions, trying to do infrastructure development so that they can enjoy this tax incentive. Then all of a sudden, the government comes up 2025 that the investment deduction will no longer be there. So you can see the kind of disruption that this brings to the investors, because they are like, ideally, we could not have invested in Kenya, we could have invested in Tanzania or Uganda or any other country. But because of this incentive, we decided to do this. And then all of a sudden, the business, the changes or the reforms comes in, and they works against, the advantage that they had tried to leverage on. And actually, we have come up with something we call the medium-term policies, which the government is hardly following, because if those policies are followed, then there will be the issue of certainty, and it will encourage people to start up businesses because they are sure about the future of these particular businesses. And maybe just to make it more clear, recently we have had a change whereby the government said that you can carry forward losses up to a period of 5 years. Now, imagine there is an investor who had come to Kenya, done a lot of capital-intensive investment that are going to give you a lot of losses that you convert into tax asset, so that you take a longer period of time before you can start paying taxes. Then all of a sudden, the government comes and says, now we will no longer carry these losses to perpetuity, we will cap it to 5 years. Then it becomes quite a disadvantage to the investors. And we are hoping that we are going to improve. And but so far, the business have been adversely affected. Just to answer your question.
Interesting. So what is compliance looking like right now? Do you think corporate companies or small businesses are able to comply as fast as possible? Who is at risk here? I mean, corporate companies have large teams with big budgets, probably audit firms on their payroll, but maybe for smaller businesses, not so much. But I'm wondering how compliance is evolving right now in the Kenyan market.
Yeah, compliance has been quite challenging. Even looking at the historical data, you'll find the informal sector in Kenya, and I tend to believe same stat applies to Nigeria, comprises of about 70 to 80% of the economy. However, when you look at the tax compliance, it's ranging at 20%. Ideally, here what we are saying, it's only the formal sector that is being taxed. So the whole economy is relying on the 20% formalized businesses, or negating the 80% of the informal sector. So I would say the compliance rate has been quite low. And I think this explains why, even if you look at the stats of the tax collection to the GDP, currently in Kenya, we are talking about 15 to 16%. So out of all the revenues, generated by businesses and individuals in the whole country, the tax can only be accounted for at a rate of 16%. You see, compared to countries in Europe like France, we are talking about 45%. And then, and you see now, this is not a matter of how much GDP you have. When you talk of ratio, it is in accordance to that particular comparative that you are using. It's our GDP against our tax collection. So it means then that the compliance rate is quite low, simply because the informal sector, the government has not been able to tax the informal sector to the maximum. And based on that, probably I would want to mention that they have come up with some measures to be able to, reach out to those people in the informal sector, because recently we have seen introduction of something we are calling e-Teams, which is electronic tax invoice management system, whereby all the revenue, whether it's from business or individual, has to be invoiced through that particular system that is able to inform the government a transaction has happened, and therefore the government will be able to follow up on the collection of that particular transaction. But before the introduction of e-teams, compliance has been quite low at a rate of 60% thereabout. Yeah.
Interesting. Yeah, I think we're going to come back to suggestions for improvement later, but I would like to see the view from Nigeria with Oladejo. I know a lot of things have been made to try and increase the tax bracket in Nigeria. The introduction of the tax ID, making the NIN and the CAC registration number for companies part of the tax ID. Yeah. Oladejo, what's your view on how compliance is evolving? Do you see like improvements in how companies are being compliant with the new tax regulations? Are most Nigerian companies ready? Who is going to be at risk at this point? Is it the smaller businesses, the corporate guys, and all of that?
Okay, thanks a lot, Emmanuel. As Simon was talking about Kenya, I was nodding my head frantically as though he was describing the Nigerian situation. I bet that explains why we are both African countries, right? Because we share a lot of similarities. So the experience that Simon had mentioned, with respect to Kenya, isn't quite different, significantly from what we have, in Nigeria. But to answer your question specifically with respect to compliance, what is the reform, doing? I think the government has tried a different implementation approach, this time, in that sufficient time has been given. I mentioned earlier that the laws were signed to become an act of the parliament since 26th of June. So the government had given allowance, to enable guideline questions, interactions like what Finance in Africa is putting together now, to happen such that there will be sufficient time for enlightenment. So what you currently have now is public taxpayers, citizens essentially clarifying how specific provisions, would eventually apply to them. One thing I must say that the government has gotten right, however, is the fact that they've created a lot of awareness. There's a lot of buzz around these the reforms. So much so that even people that are in the diaspora, will send you questions, via social media platforms, and call and try to just get clarifications to say what's going to happen to this and that. So generally, I guess it's an African thing. The level of when Simon was talking about tax to GDP ratio in Kenya standing at 16%, if we ever get to 16% in Nigeria, that would have been some massive record, of gains. Yes, he did mention that the size of the GDP might differ, but because you're looking at ratio, you're looking at comparatives, because in Nigeria, that particular ratio, for instance, um, stood at 6%, for a very long time. I think we are just beginning to reach something around 9, and that 16 that Kenya is currently at is a target into the future, for the government. That's one way you can use to measure the extent of compliance and improvement that you've achieved, when you introduce a new taxing legislation, because the main effort is how much of that tax revenue is then being contributed, to the pool of revenue that you have. The bane of the issue really is the fact that the government have been kind of distant to the citizen. There've been some sort of unspoken arrangement that, hey, government, you know what? Don't bother me. Especially with respect to the informal sector. Don't bother me. I won't bother you. So I don't want to know my representative. I don't know you. You don't know me. I want to do my business on Instagram, do my business online, facilitate my business in whatever way. I won't pay taxes. You won't ask me. I won't bother you. You won't bother me. That has kind of been the agreement that have not been written or documented or codified anywhere. And that's why you see citizens, contributing for their roads. In some instances, you see people, digging their borehole. You see every household every area, every community having their own security men or forming vigilante group and funding them and all of that. So because of that fact, right, you typically don't see the vulcanizer on the street getting worried about how he's going to pay his taxes. He doesn't even know that something exists that, that are called taxes, So that distance has always been there with respect to the informal sector. But when you come to the formal sector, these are, folks like you and I that are already quite conversant, with these subject matter. So what the implementation approach that the government has introduced now is changing is first is creating a lot of buzz. You see the government set up a committee and they drew people from many sectors, students, they took, one of us from Andersen to be a part of it. They took from technocrats, they took a professional, for instance, to head the committee. They did a lot to be able to gain public trust, and that process didn't take 3 months. It took 2 full years. So 2 full years for them to be able to negotiate all of the fundamentals, you are aware of all the issues that happen when the governor say no, the VAT rate can go up, and this and that. So if you have a country of many interests like we currently have, you would have to ensure that all of those interests are catered to. So currently what has happened is everyone is kind of looking forward to that commencement day, right? Putting their acts, together and putting their businesses in order, asking questions as to what do I need to do? And if you ask me, that phase is actually the first phase in the compliance journey, because if that phase is gotten correctly, what you would see is you have more people coming into the nets, into the tax net. And when the tax net is increased, and the tax net, when participants within the net increases, right? What you typically have is just increased revenue by implication. Because come to think about it, you have the population, right? But the population is not directly proportional to the tax revenue that you're getting from it, which is why you have very low contributions, when you take your tax to GDP ratio. So in a nutshell, what I would say is what is happening now is the preparatory phase towards that eventual compliance. That's why you see people saying, oh, my tax ID, I can't hold a bank account, like when Nigerians were told to go have a BVN, you'll be shocked that you still have people that are bankable in Nigeria today that still don't have BVN several years after. So anyone who is expecting that anything will change abruptly or within the twinkle of an eye is not being a Nigerian, right? You're expecting too much. Things will change, certainly, because you would encounter some roadblocks in the way you used to do business as you have always known them, because of certain changes and certain laws. There are certain things that the tax authority had wanted to do in the past that they didn't have the power of the law to do them. Introduction of technology, for instance, the fiscalization that Simon had talked about happening in Kenya. You have to now raise your invoice when you have 5 billion threshold in revenue. Those are areas where some of the SMEs, some of the small companies that are playing within the Nigerian space would be exposed, to the taxing authorities, and they will be able to pay their fair share. So by the time you put all of these efforts together, what you would have is increased level of compliance, that is coming from a place of enforcement and willingness. And then when that also happens, you also see increased level of revenue by implication.
Awesome, awesome. I like the point that you made about technology and the use of technology. And yes, a lot of corporate companies are used to the taxation system, but with the introduction of technology and the digital space, what are those things that we need to know, or not we per se, but like any corporate company watching this or listening to you right now, what are those things like basics? Of course, they can come to Andersen for the deeper details later, but like what are those basics that they need to know for them to stay compliant with the new regulations?
Okay, fantastic. So I think first thing first, if you're a big company and your turnover is up to 5 million, you need to know that from the 1st of November, FIS has changed that date a couple of times to be able to accommodate more and more taxpayers. From the 1st of November, you will no longer be able to, you'll be in the wrong if you keep transmitting your invoices the way you have always done, your typical PDF, Microsoft Word, and all that. FIS now has a merchant buyer solution platform where they expect that all companies that have turnover of 5 billion and above should generate their invoices and transmit their invoices to your business. This entire thing that I've mentioned is called fiscalization. So the government wants to be a part of your business. They want to have online real-time access to how your business transactions are, conducted. Now, the end product of this would be reduced time in conducting audits, for instance, because if they already have a platform to validate your revenue, then it will reduce the time spent in conducting an audit when they don't have to come back to check the extent of your compliance. So as a big company, quote unquote, because the threshold is a lot of companies will fall into that category in Nigeria. It's just 5 billion, so you should know that you are mandated by law to start transmitting your invoice through the FRS merchant buyer solution platform. That is the first thing to note. The second thing to note is if you are a small business, the definition of small business, has also changed. If you have turnover of up to 50 million, even though there's another act, the Nigeria Tax Administration Act, that says small companies and refer to 100 million. But the instructive thing to note is to note that there are two conditions: your revenue and your asset base. If your asset base is more than 250 million, and your revenue is 50 million, you will is not up to 50 million, and your asset base is not more than 250 million, then you are a small business. And as you're a small business, you're not required to pay taxes. So that's a major game changer. So the government is trying to say that I'm after you coming into the net, but I'm not really after you paying taxes immediately. The good thing about coming into the net is growth isn't something that growth at some point is something that happens quite naturally, right? So if a business is incorporated and it continues to do the right thing, growth is going to come. So if you're in the net and we're not taxing you at the level where you are still small, by the time you grow, you're already in the net anyway. So there's no need for us to start running after you anymore because you're already in. So you may have obligation to report to file returns, but you will not have to pay, taxes. The other thing to note is with respect to employees, and you also have similar provision, for employees where if you have earned up to 800,000 naira for an entire year, your tax rate is 0%. You're not required to pay taxes. So there are a lot more provisions like that that have been introduced into the taxing legislation that businesses and indeed individuals are required to familiarize themselves with.
Okay, awesome. Yeah, thank you for that comprehensive breakdown. I think it's quite interesting to see how immersive this new phase or this new regime for taxation is looking like in Nigeria. So, Simon, back to you. Do we have the same level of immersiveness in Kenya as it were? And this is just to ask what extent digital technologies are influencing the new fiscal strategy for companies, the corporate guys, and the smaller companies. So what are those basics that big companies need to know? What are those basics that the smaller companies need to know as well?
Yeah, thank you so much for that question. And it's interesting to hear what exactly is happening in Nigeria as well. But I think what I can see in this case, Kenyan government has really tried to push the taxation into the digital space, both for the small businesses and for the the giants. We call them the giants. And let's start with them. For instance, when you talk of these large businesses that are existing in the Kenya market, but they don't have physical presence in Kenya. So the government has introduced something we are calling SEP or SEP, which basically stands for the significant economic presence tax. And what SEP is doing is that it's charging tax at the rate of 30% based on the revenue that these giants are generating here in Kenya. So they will be needed to get 10% of the year total revenue collection, and then the 10% is taxed at 30%. Ideally, it's something about 3% of overall income is now being subjected to tax. So, and because it's easy to track them, then I believe this is something that is going to generate a lot of revenue to the government. And at the same time, it's going to ensure that everyone who conducts business in Kenya at least pays something small to the Kenyan government as well. And on top of that, there are other measures that the government has really tried to do. For instance, the Revenue Authority has now been subdivided into sectors. There's a sector for small businesses. Some of them, they call them micro and small, medium taxpayers, large taxpayers. And now those ones are also subdivided into industries. There are those who are in manufacturing, those who are in petroleum, those who are doing just the normal, businesses, the trade. And what that has done is that it has narrowed down each taxpayer to a particular sector or industry, and that is making it easy for the government to trace their income and probably collect taxes based on those particular incomes. And on top of that, there's something significant that has really happened, because although it has been there, but many people have not been able to fully utilize it, called turnover tax. So they introduced turnover tax whereby they're saying you are a small business, you're not able to trace your expenditures, you're not able to trace your your income and expenditures. So what the government is just saying, just pay us 3% of your total sales and we are done. So it won't ask you for your profit or how much you have incurred. So we don't go deep down into those levels, because definitely these people are not going to give the correct position of their businesses, because some of them don't even know. But the moment you introduce something like 3% of the total sales, everyone knows their total sales, and then that's all. So there's really supporting documentation that is going to be needed for them to do the compliance. So that's part of changes or reforms that the government is trying to do to make sure that it brings everyone on board into the tax bracket. At the beginning of this session, I mentioned something we are calling e-teams, whereby all businesses, they are supposed to generate, just like Nigeria, a tax invoice that is compliant, that has a QR code that can be scanned, and it's able to show that the data has been transmitted to the government on a real-time basis. So there are a lot of similarities, and I think it's high time that businesses start updating themselves into this reality, because right now it looks new. In the next 2 to 3 years, it will be a normal thing, and therefore the earlier the businesses adapt, the better for them. So e-teams has really helped the government to collect VAT, especially because being an indirect tax. the moment that an ITIM's record is transmitted, then the government is able to know there is a VAT to collect on this particular transaction. So those are some of the reforms that have happened that are really helping the government to expand the tax collections, both digitally and for both the large taxpayers and the small businesses as well. Yeah.
Awesome. Interesting. Now, the part with companies with significant economic presence, the SCPs, I'm actually now trying to zoom out to, okay, the multinationals, the tech giants that have business presence in Kenya. And I'm now zooming out to the investors and everything. I'm wondering, what does this mean for cross-border trade and capital flows in Kenya, especially with Kenya and other countries? So companies looking to set up in Kenya, companies that with investors that have investments in Kenya and they want to kind of repatriate their funds. Would this impact them in any way, as it were?
What has happened previously and how these tech giants have responded even historically. Before SET, we had something we were calling digital tax, DST, digital service tax. Yes, it was introduced back in the year 2020 during the COVID period, before it got repealed. But now, how they responded is that they making their services more expensive so that they maintain their margins, and the Kenyans who are consuming these services top up the tax bit. Ideally, that's what has been happening. And we expect, even with the SCP, we expect the same thing to happen. But funny enough, I can assure you of this, Kenya, in terms of consumption of these digital services, the consumption of these services is not going to go down. As a matter of fact, it's going up. Because Kenyans are so much used into it, they can't do it without some of these things. Talk of Netflix, talk of these softwares. So even if the costs go high, Kenyans are still subscribing to them. And I think these tech giants will be able to observe those trends. And therefore, to some extent, they are not much worried because they're just going to add the costs and push that cost to Kenyans. And the Kenyans definitely are going to be able to pay taxes to their government. And these giants are going to retain their profit margins. And it's quite unfortunate, but ideally that's what is going to happen.
Okay, but any risk of capital flight for, let's say, investors who invest in Kenya? Is there any risk for them as it were?
Yeah, for investors, that can be debated depending on the kind of investments they are gonna do. Because as you heard when I was beginning, most of these digital investments are happening here in Kenya, and it's all over in the public domain. Recently, we have had the UN offices being relocated here in Kenya. So we don't expect much loss in terms of the investors, although some, to some extent, could try to do it in other countries, but we don't expect a higher percentage of the investors to go away because of the SCP.
Interesting. Thank you so much, Simon. I think this is a really, really useful and interesting perspective. And I'm circling back to Oladejo again to look at the view from Nigeria for foreign investors, for companies looking to do business with Nigeria, and what the risk for them is. And of course, for investors, if you're familiar with the digital space, a lot of foreign investors are investing in startups and technology firms. What do these mean for foreign capital and foreign companies with significant economic presence in Nigeria?
Okay, thanks a lot. Indeed, there are a lot of similarities between Nigeria and Kenya. Because when Simon mentioned the SCP rule, it actually started in Nigeria at about that time as well. There's a traditional section in the primary legislation, which is the Companies Income Tax Act, Section 13, that has always sought to tax, the activities that are domestic in nature, meaning you can only be seen as doing business in Nigeria when you are on the ground in Nigeria. So that has always been there to say if you're not physically present in the country, how then are you doing business? How can we say you're doing business in Nigeria based on the rules? So that order came in to be able to bridge that gap, and since then, it has been able to inculcate the digital measurement of your activities, which is where the presence then shifted to economic presence, rather than fiscal presence. So I just wanted to mention that before going to your question, in particular.
Cool.
So what's the fate of investors specifically? So let's just take a cue from what we've experienced within the FX market. Look at it. It's not been cheap. The rates have not come down drastic, but it's been stable. I don't think people are asking for cheap. I think people just want to be able to plan. Investors is been accessible. It's not been like anything we've experienced 2 years prior. Where you could literally walk into a bank and you want to withdraw your USD and you don't have it. That's no longer happening. You could go to up to 4 branches before you could even get up to 30,000 USD. Now it's available, right? The rate is even been coming down, been coming down for like a couple of days now, so, but that stability, is there. So I think we're beginning to have that increased level of confidence in what is happening, not because everybody likes it, or because, they've been massive shifts in the earning capacity and per capita income, of every Nigerian, but there've been some sort of rebasement, I should say, to say that things have shifted, so if your working capital was X before, for you to be able to do a particular volume, it will have to be like 2X or 3X now, but you now know that you can keep it at that 2X or 3X, if the FX numbers have been stabilized. So primarily what's in it for, what investors should be aware of is the fact that coming with new tax legislation provides a better framework. There are provisions within this tax legislation that already anticipate that even the Company Income Tax Act, the rates could even come down. There are silent provisions that have been like this 5% fuel charge, that you have as surcharge in Chapter 7 of the Nigeria Tax Act. Those are provisions that have erupted a lot of controversies. To say, oh, you took away the fuel subsidy, now you are bringing another 5%. But this was a revenue generating provision that was in a different act. As far as 2007 was in the FEMA Act, Section 14, Solution H of the FEMA Act provided that there will be 5%, on PMS that will be dedicated towards the repair of the roads. In fact, the provision says that 60% of it will go to repair of federal roads, state roads, while 40% will go to repair of federal, but it was never collected. So the government has kind of harmonized all of those provisions from the different acts of the parliament that they were in to bring everything into one, taxing legislation, so that as far as taxes are concerned, or as far as what the future holds, is concerned, with respect to Nigeria, you can focus on a few documents. So I think that's a massive step, to signal that there's going to be some solid framework. And I think the investors are catching that signal, and I think they're also acting accordingly.
Mm. So do you think this will encourage investors or make them scared? What do you have? I know there's no crystal ball to actually know, but what sentiments are you getting so far?
Yeah, everywhere in the world, right? Stability encourages investors action. Stability doesn't discourage investors action because stability is key. Nobody wants to move his money in and then boom, something changes and then you are locked down. So taking a 2-year period to work on reforms, have a holistic review, give 6 months before the commencement date and all of that, FX rates, of course, removing the CBN intervention to a very large extent, to say, and not pushing it down, letting the Naira be on free flow. So all of those actions, removing fuel subsidy, they've been actions that have been reeled with pain and agony. But one thing you can't take away, if I ask you, for instance, where was the last time you were on a queue, in a filling
Mm.
station in Nigeria? So you may, yes, the pain is palpable, right? We can touch the pain everywhere. The number of people asking you for urgent 2K has gone up, everything has skyrocketed. But you see, you can also not but see the gain. Yes, we are buying fuel for almost 900 naira per liter. But when last did you key? Have you suddenly just started your car and then you find out that there's no fuel? No, it's available. So that stability always signals proper structure and framework for investors. And that will make them say, okay, things may be bad, but I can plan around them and look at how can I optimize those seemingly bad situations to achieve my economic goal and my plan, as a business.
Yeah, yeah, awesome, awesome. Yeah, stability is, I think it's a very, very key word. The investors want stability, they want certainty. And yeah, thank you so much. Yeah, I think at this point, I'm opening it up to the audience to ask questions via the Q&A section. I'm sure there'll be questions from the audience, people who are actually curious. Uh, yeah, so we have a question already. So please feel free to start dropping your questions in the Q&A section. We have one already. We have one from Samuel Davis. He is asking Mr. Oladejo, you mentioned the awareness that the Nigerian government is creating about the new tax regime. Uh, can you shed some light about why there's a disconnect between awareness and public acceptance? Now, I think this question probably might go to also to Simon, because I know there's a recent protest in Kenya, uh, following the Finance Act. So I would like both of you to address how the public is
Okay.
receiving this. Yeah.
Okay. So let me say this, right? You see, we need to remind ourselves how we got here. Right. Remember what I said in the course of this webinar that there have been some unspoken agreement, unwritten agreement between most Nigerians don't even know their House of Representative members, for instance. They don't know who is ruling their constituency. So it's like, don't bother me, right? What I
Mm,
give you in return is that I promise you, I will also bother you. So I make my petty cash, my money. You don't tax me as a organizer on the road. And then I also don't come to you to ask for security. I just survive somehow, So, and everywhere in the world, tax is a social contract, right? Citizens pay taxes in anticipation that government will be able to fix certain things for them with those taxes. Now, for the Nigerian story, the reverse has been the case, right? Some people don't pay the taxes. Government doesn't bother. And they also don't ask government for those amenities for the most part. So the trust quotient is low because things have been bastardized over the years. And this thing didn't start now, right? Nigeria took its eyes away from the tax revenue immediately oil came in. So at the onset of 1958, when we discovered oil in Oloibiri, right, and we started going into the 60s, and the money started coming in, because back in the day, right, my parents would tell you how you own a bicycle, you'll be rushing and queuing to want to pay the bicycle tax, that you should pay on it. So you don't have that level of enthusiasm anymore. Nigerians have lost it because you see people saying, even when I pay the taxes, what will the government do with it? That is on the one hand. On the other hand, you also see government saying, oh, austerity measure, austerity measure. But at the onset of the administration, you saw president buying SUVs, allegedly valued at maybe 145 or 150 million for every lawmaker, and you have over 300 of them, right? And then you also see how the aircraft for the presidency, was bought, even though it was not part of the budget. So I'm saying that all of these actions, even though they are standalone actions, they do something in the minds and the hearts of citizens. They make citizens feel the huge level of disconnection that government doesn't care. And that doesn't matter. It doesn't matter what the government does or what it says. People are going to look at what are you doing actually. If you say there's austerity, how is that impacting you, as individuals and as governments? How is that affecting the cost of governance? How has that helped you to prune down the number of office holders, that you have, or you keep appointing and keep appointing and keep appointing? So when you put all of those things together, what you would find is, regardless of how much effort and money the government is putting into pushing that awareness out there, right, is going to be falling on deaf ear, because you are talking to a spouse of yours who doesn't trust you. If you have a wife or husband and you guys earn income together and you guys are upfront with one another, right? If your wife says, send me all of your income, you can send all the income to your wife, because you know that when the chips are down, she's going to bring everything all out, right? If you have a husband that is not transparent to the wife and you need support from the wife, you're never going to get it. That's exactly what you have. So when you have a union or a marriage that has been bastardized with distrust, and the trust quotient is very low, regardless of what one party does, the level of awareness would certainly be met with repulsiveness. I hope that helps the person that has this question to get some sort of clarity.
Yeah, thank you so much, Joe. It's been really, really insightful. Simon, would you care to chip in what the public reception has been uh, with the new reforms?
Yeah, that's an interesting question. In a conversation as well, considering what Adeyemi is talking about, and I like his examples. But here in Kenya, I think things are working quite differently, because initially, and I want to mention this in the context of what you mentioned about the protest and the gap between the awareness and the public participation. And what I want to say is that historically, anytime Kenyans had there is a budget reading, then it never used to be much of a bother to majority of Kenyans, because they expected the obvious. The price of the beer is going to go high, the price of the cigarette is going to go high, probably sugar is going to come down, basics, obvious. But now currently, of course, due to the introduction of the social media and, also the improvement of the education system, you'll find that quite a good percentage of Kenyans are aware what is a finance bill. They may not define it as it is in the dictionary, but they have the awareness that this is whereby measures are being brought on board by the government so that it can be able to collect more revenue. So the first question they will ask you is, what costs are they increasing? Are they touching on fuel? Are they touching on bread? Are they touching on motor vehicle? Like last year, by the time there was that the protest for the finance bill, they wanted to tax motor vehicle, which is ideally not an, yes, we say it is an asset in the books, but ideally, if you have it as an individual, it's a liability, then you are being taxed on that, which was quite unfortunate. And, this triggered, the public to come out, in large numbers, to protest against some of these laws. So I would say awareness in Kenya has significantly increased. People are aware when the government wants to increase the prices of commodities, of course, through taxation. And to some extent, they're also aware of the government tricks of how they normally come up with some regulation, perhaps to say we are going to increase tax by, let's say, 3%. Then, of course, there's normally a period of public participation, which was introduced by the new constitution. And then the government is going to come and say, now we have heard you because of the public participation, we are going to increase the rate by 1.5%. So they are aware of those tricks that government sometimes does, because the initial idea was ideally to increase by 1.5, but now they will come and say it should be 5 or 3 or 4. Then, of course, after the public participation, they say, we've had you, now we're doing it at 1.5%. So people are getting enlightened, and through social media and also through the mainstream media, they're able to even participate and give their views about the current changes that are happening. So it's not the normal business for the current government in Kenya.
Awesome. Thanks for making that clarity in a full focus here. Now, someone is also asking you, like, of all the reforms that are ongoing, which do you think would make the most impact? Yeah, which is the most significant provision in the reforms that would drive the most impact? It will also help if you give us a bit of context of what the tax system was like before now. Maybe if you could describe it in a sentence, what it was like, but which of these provisions would make the most impact in the Kenyan market?
Yeah. Let me mention something interesting that has come up, and I don't know why many people actually are not seeing this. So recently, they have introduced something we call withholding tax on goods supplied to the public entities. So historically, looking to Kenya, withholding tax has been applied mostly on service. Talk of interest, talk of consultancy services. Yeah, and to some extent, it also went to rental, which is still service, and then there is also VAT withholding. Now, interestingly, there is withholding tax on goods. So I want to maybe bring this into context on what it actually means. Majority or almost all the government entities do procurement of these particular goods. And what normally happens because of corruption, they overstate during the procurement procedures, they overstate the cost of these goods. And therefore, you find a government buying a book that could cost 1,000, they buy it at 5,000 or 10,000. And then, of course, the other, markup is shared among some guys. So, and what usually used to happen is that these guys will not account for these particular transactions or for the sales done to the government entities. And that's why you could find, when you compare tax to GDP, you find it, we are still down. Why? Because this is a significant, you can imagine all supplies to government institutions. It's quite a significant amount. And now with the introduction of the withholding tax, then it means that everyone who supplies to the government will have to account and pay taxes of whatever goods that they do the supply to. So, and this is going to translate to increase revenue to the government. And of course, it will bring more visibility in as much as it might curb corruption in one way or another, but it's going to be very much significant come next year because the accountability that will be taken care of in this particular provision is going to be massive. It's going to be massive. Yeah, that's the major that I can talk about right now.
Awesome. Yeah, thank you so much. I'm sure whoever asked the question has gotten a bit of clarity on that. And yes, so I have a question for Dejo. Okay, I will just combine two questions because of time. So Dejo, someone is asking, the new law has consolidated tax due to large companies into four: development levy, company income tax, capital gains tax, and research and development levy. How do you think this will impact large companies in Nigeria? Will it result in a drop or an increase in tax payments? And someone is also asking, since 2026 is pre-election year, do you think this tax reform will be implemented? Yeah.
This tax reform will be implemented though. If you look at the pattern of the government, the current government, you see that the government is very brazen, very, very brazen. It was on the 29th of May, if my memory serves me correctly, that the 2023, president announced that subsidy, was gone. Looking back, it was not the best approach to have taken in, a lot of economists came to say you're supposed to have phased it out gradually, you're supposed to have done this so that the impact will not worsen at the same time. And then the Naira was also floated immediately. Now, those were two most significant triggers or policies, that will have an impact on the citizens directly. And we felt it. We all felt the agony that came with the removal, sharp removal of the subsidy, at the time. But you see, 2 years after, we are no longer where we used to be. So if you take a cue from how this government has taken very difficult decisions in the past, even the ones that have been, remember what happened in 2012 when the Goodluck Jonathan government, wanted to increase price. There was a Ojota makeover. We didn't have a Ojota makeover this time around. Though. For 2 weeks, the nation was shut down. This government is ruling with the heart, doing whatever is going to take to. So if those things that have happened are sufficient cue for anyone, you should know that from 1st of January 2026, these laws would be implemented. I can guarantee you. In fact, two of them are already in existence. The commencement dates based on the version that will be released. Of course, those ones don't have provisions that deal directly with citizens and businesses. They deal mostly with administration, and the joint revenue tax board, and all of that. So, but I'm very confident that barring any unforeseen circumstances, because they also try to listen to say if there are reasons why commencement implementation should be delayed. I'm also very positive that they will consider those things. But to the best of what I know, there's no reason why implementation should not happen. Remember that the laws were signed into act on the 26th of June. And if you're giving 6 months for people to put their acts in order, some will argue that it's insufficient considering the Nigerian reality, but really, how much time would we say is sufficient in a matter of taxing legislation? Because if you ask the best of us, nobody really wants to pay taxes, right? So regardless of how much time you give, everyone will still say, give us some more time. And that is where the brazen nature of the government is going to come on. So I have no doubts entertained in my mind whatsoever whether or not this will kick off by 1st of January. It will kick off. What we should expect, however, is I mentioned the case of BVN. Several years ago, the need for people to have BVN, commenced. It will be shocking that several years after, you still have some artisans that you give work to. They'll still tell you they don't have bank account because they don't have BVN. So what has happened is that the rule didn't change for them. The banks didn't open bank account for them because they didn't have BVN. They are the ones who do not have bank accounts because they didn't have BVN. So let me say that again. The rules didn't have to change for them to accommodate them. They still don't have BVN. They still don't have bank accounts. That's the consequence. So that's what it's more of that consequence reaction that we are going to be seeing. So if they say you need to have X to operate Y, if you don't have X, then you won't operate Y. So we should just expect more of that. But it doesn't mean every Nigerian would automatically. I believe there's going to be transition period. People will have to suck it in. People will embrace the reality. People will have to accept it. The level of acceptance, like someone has asked, is still low. But as people continue to see more and more seriousness from part of the government, they would also continue to do their best to be sure that they come correct on the side of compliance. I hope that provides sufficient answer for that person that asked. I think there's a second part of the question.
Yeah, the part about the consolidation of tax for corporate companies, development levy,
Okay.
capital gains.
So
Yeah.
So I think generally, you need to look at that from the spirit of the law, right? What the law is trying to say is, see, some people even want to do the right thing, but they don't know where to go because there are many acts. You have the FIS Establishment Act, you have the Companies Income Tax Act, you have the Personal Income Tax Act, you have the Capital Gains Tax, you have the Value Added Tax Act. You have that. You will need to be a tax professional for you to know what to do. In developed countries, you don't have to be a tax professional. So I think the attempt that the government has made is to first reduce everything into one legislation. And to be able to do that, there was need for some harmonizations. So you look at some of the taxes that have been existing in isolation, they were condensed into becoming development levy of just 4%, right? Then the issue with capital gains, even though you see have capital gains, what the government is trying to do is I no longer operate a capital gains tax regime. I just want to tax income. So I don't want to separate, as you have it now, till 1st of January 2026. If you have capital gains, if you have disposed an asset and the disposal proceed of the asset is higher than the historical cost of the asset, the excess is going to be regarded as capital gains and it's going to be taxed at 10% currently. Just because of the nature of that income, it will attract 10% capital gains tax. What the government is trying to do is to move away from that, such that it's income and only your tax rate, the tax rate that applies to you, whether you're an individual that has earned that income or you are a company that has earned the income, the tax rate that should apply to that income will just apply. I don't want to distinguish between trading income or capital gains income or anything, or gain income from asset. No, income is income. And I want to tax your income, right? So that's what the government has tried to move away from, to say, I am taxing this income based on the rate that applies to you as a corporate or as an individual. So when you look at the law, you're not going to see capital gains tax as it were anymore. There'll be capital gains when you make disposal, qualifying disposal, or disposal that qualify for capital gains purposes. But the tax rate that then applies to you as an individual or as an entity, a company, will then apply to that. So that level of harmonization and streamlining is what the government has attempted to do through these reforms. How would that provide some comfort?
Yes, it does. Now, there's something I need to clarify before we move on, and I think we'll just ask one more question and round up. But I want to clarify, for small businesses, is it 50 million or 100 million? Which are we going with?
Okay, so that confusion emanated from the tax laws, sadly. So you have 50 million small company in the Nigerian tax law. when you go to Nigerian Tax Administration Act, you see small business, 100 million, right? Now, but the most instructive thing is that it didn't just stop at revenue threshold. There is also a conjunctive condition, which is assets, value of assets. So I give an example. You may own a truck. You are doing a college business. You own a truck, and then your revenue was just 25 million or 24 million. In the current regime, even though you own a truck and the truck is valued at 500 million, or you own 10 trucks or 20 trucks and the trucks are valued at 500 million, but your revenue, surprisingly, was 24 million. Currently, you are a small business because you are less than 25 million revenue, right? And you will not 0% that would apply to you. But in the new regime, we're not just going to be looking at revenue. We're also going to be looking at the asset base. The asset that you're using to turn over that revenue, right? What is the quantum of that asset? If the quantum of the asset is significant enough and the government peg that significance to 250 million, if the quantum of the asset is above 250 million, and you have revenue of 50 million being of the two that I've said, the two different created that confusion, but at least let's take the lowest, then you're not a small business. Does that make sense? Remember, it's conjunctive, it's and, not or. So both of them must happen to you for you not to be a small business anymore. Otherwise, you remain a small business, whether you are 50 million or 100 million, as long as you don't have up to 250 million in asset base. Does that make sense?
Yeah, it does. It does. But I guess if it's the asset base is below 250, but the revenue is 70 million, we are not entering the realm of debate. Is that the case? Like, are we?
No, it's not. The asset base is okay. Good analogy. The asset base is 70 million, right? So it's between 50 million and 100 million. And
Yes.
the revenue is below
Revenue.
is 70 million. The asset
Yeah.
base is less than 250 million. You are still a
Yeah.
small business because it's conjunctive. The two must happen at the same time, right? So you must have your revenue up to say 50 million or above 50 million, say 70 million, and your asset more than 250 million. So if your asset is below 250 million, you are still a small business. Does it make sense?
Okay. Yes, it does. It does. Thank you so much.
Yeah.
Now to just round things up because we're running out of time. Simon, there's one more question for you. Amara is saying a new tax policy is making the waves recently with the KRA's decision to block tech giants from receiving tax refunds when they exit Kenya if they don't hold a local bank account. How do you see Amazon, Netflix, and others without physical presence in the country responding to this policy?
Yeah, indeed, it's an interesting conversation that is going on. Recently, the Kenya Revenue Authority has rolled out the regulation for significant economic presence tax, and part of these regulations is concerning the refunds, of tax to the country, to the companies that don't have their presence here in Kenya. And what the Revenue Authority is proposing or is trying to bring into public awareness is that these companies are going to be required to have local bank accounts for them to receive their refund. So this has brought a lot of mixed reactions, both internally and externally, because you cannot just edit it there that you'll be required to have the bank account, and now therefore be asking, so what? And there is no refund, what will be happening? What are the administrative costs of having such a bank account? Are you, as a government, trying to tell us that we need to have physical presence here in Kenya indirectly? Because ideally, to some extent, when some of the when you look at the requirements of having a bank account in Kenya, probably you will be needed to have a subsidiary here in Kenya. You'll be needed one KRA. That means that now you have to start with the registering a subsidiary or a branch in Kenya. Then you apply for a KRA PIN. And of course, some of those actions are going to convert you automatically into a residency. You see, there's something we call a PE, or permanent establishment. So some of the requirements of opening a bank account are going to convert you to become a tax resident here in Kenya. And that will be a game changer, because now it means you move from the SEP and be taxed as a Kenyan local resident. So it's very ambiguous. And the good thing is that we are at the stage of public participation. The regulations, the draft is already out, and we are currently trying to approach the government so that it can look at what this means in a wider view. In as much as these companies might want to comply so that they can get the refund, because sometimes you have to look at the costs of complying compared to the how much refund you are expecting. I feel like it will be quite I lack a better word to describe this, but it will need a lot of admin costs for these companies to actually, be able to comply with that. And personally, I find it impractical, especially in long term, because these refunds don't happen every now and then. But then it is going to cause a lot of changes internally. And going back to your initial question about the investment, somehow it can affect. I know some of them will just opt to, I don't want that refund, let it stay, because opening a bank account will mean a lot. So we are waiting to see if the government is going to change the mind based on the public participation that is ongoing. But personally, I will not advocate for one. Yeah.
Awesome. Thank you so much, Simon. This has been a really, really insightful section. Thank you so much, Oladejo. I really appreciate you guys having this conversation with us today and helping to drive this public conversation on tax reforms. I know this is still happening across different African countries. I'm seeing, after I announced this webinar, I saw some update from Tanzania. There's a new tax reform ongoing there. There's a bunch of other African countries, and I think this is going to be a massive one. There are more questions here that I can't take, but since we're running out of time, but thank you so much. If there's anything you would like to share before you leave, maybe a parting shot, a mic drop moment, or just as simple as where anyone who is watching this can come and find you and get more information. Is it something you're open to? You could also share that. We can go with Simon or Dejo first. Yeah, we can go with Dejo, then Simon. Yeah.
Okay, thanks a lot. I think the thing to say on the final note is to say that this is a game changer for the Nigerian environment, for investors and potential investors, and everyone needs to take it as such. For me, for instance, I had to start a podcast line when this law was signed into, when the bills were signed into law. So you can follow me on all of my social media platforms, Oladejo Adeyemi on Instagram, on YouTube, and all of that, because this is something very massive, something that Nigeria has really not experienced, before in recent times. We've always had cosmetic adjustments and amendments to the tax law. This is the first time in a long while that all of the laws are being repealed at the same time and being exchanged for brand new laws. So for what it's worth, in over 15 years experience, it's the first time this is happening, and some of us are throwing our weight on it for that much. So to catch up more and to continue to interact more, you can just freely follow me and then ask your questions, and at the appropriate time, I'll definitely respond to it. So I wish everyone all the best. Thank you, Finance in Africa, for all that you guys do to put this together and for enlightening the public. It goes a long way in building a better business community. Thank you.
All right, thank you. Hi, Simon. Your parting word.
Yeah, thank you, Emmanuel. What I can say, as the parting short is that, the future of tax system is ideally not about revenue correction, but it's about building trust from the taxpayers, and this trust brings fairness and growth, and then the growth brings the tax correction. So if we focus on correction, then we are likely to lose it. But if we focus on the fairness, trust, and business growth, creating the right environment for business, then collection will become easy and automatic. So, and I also want to say that I appreciate the time that we spent together to discuss this, and I'm hoping that we can do more of this so that we can keep the public aware of what is happening, especially on the reforms, so that they are not caught off guard. And I thank you, Finance in Africa, and you are much appreciated for the great work that you are doing. Thank you so much.
All right, thank you so much, Simon. How can we find you if we want to reach out and work with you?
Yes, you can find me on LinkedIn, Simon Maina, CPS, yes. Or you can visit our website, corpliteconsulting.com, and you'll find much more information on how to contact us, both on telephone and also on email. And we are happy to support businesses to comply with the tax regulations. Thank you so much.
Thank you so much, Simon. This is really, really, really an amazing session, really, really brilliant and insightful. And for everyone watching this, wherever you are, we're watching us from, thank you so much for joining us this evening, afternoon, depending on whether you're WAT or EAT. Please keep following Finance in Africa. We'll be posting clips of this webinar so you can go back, refresh your memories. And if you have any extra questions that we couldn't answer, please drop them. I'll plead with our guests here to see if they can maybe address some of the questions as they come. But like you've already heard, you can actually reach out to them on all the platforms, on your websites, on Instagram, on LinkedIn, wherever you find them. So yeah, visit financeinafrica.com. Follow us on Twitter, Finance in App. Follow us on LinkedIn, Finance in Africa. It's we crossed 5,000 users or 5,000 followers yesterday. Majority of them are from Kenya, then the next of them are Nigeria. So it's a really, really amazing platform, and you get to see more of insights like this. So thank you so much for joining us this afternoon, and see you in the next one. Thank you.